We got our first glimpse of Michael Burry's portfolio coming into Q1 of 2021 last week, and everybody went crazy when they saw he had a put option on Tesla worth $530 million. We'll touch on that a little bit later, but what I'm thinking is something that everybody is missing, and the way that he's positioned his portfolio has huge red flags. Now, if you remember, this is the guy who predicted the housing market crash back in 08 and 09, so it's always interesting to see when he comes out with his new portfolio and we get to see where he is positioned. But if this is your first time here, my name's Nick. Welcome to Ways to Wealth. Before we get into the video, huge favor, if you learn something new or you get some value out of the video, hit that like button for me. And if you haven't already, consider hitting that subscribe button, turning that notification bell on. I would definitely appreciate that. We'll start off by looking at Michael Burry's fund. It's called Scion Asset Management or Capital Management. We'll look at the performance over the past couple of months, and we can see here that it's really been a huge quarter for him. It looks like the fund went from somewhere around $224 million to $1.35 billion. What a massive gain in only such a short period of time. You can kind of see that it was kind of staggered around, so I don't know if that's really the market value supposed, because you don't really know at what price the company got in there for. But regardless, let's take this at face value and say, hey, Michael Burry did a great job this quarter. With that being said, let's take a look at how the portfolio is balanced on a sector basis. Like, where is his money? This is definitely something that it can be of use when it comes to seeing where people have their money positioned, and we can see that right here. So it does go back. This website is Well Wisdom. It does go back over the last couple quarters up until 2015 and shows you where it's all balanced. And we'll start right at the top, and that's energy. So huge, especially since people think that energy is down. Gas, oil and gas definitely has a burn and a black mark beside its name, but Michael Burry doesn't think so, with almost 30% of his portfolio made up in this sector. Finance is 10%. You can see from last quarter he's probably reduced it just over 1 and a bit percent. You have healthcare at 12.69. This is something that was not in the portfolio, not since 2019. Then you have real estate at 15%. Still makes up a large portion of the portfolio, but is looks like it's been reduced by almost 6% there just from the last quarter. You have consumer staples making up 15%. You can see here that's a pretty big increase from the last quarter. Then you have transports at 6%. This is new since Q2 of last year. And then you have utilities and communication. So I've done a pretty good job of scouring through to see what are new positions, or what's been added in there. Something that this chart doesn't consider is some of the financials, and we'll take a look at that. Now, first, before we do that, if you are interested in seeing different SEC forms, different 13F filings, this is done on a quarterly basis, and it's all hedge funds that have a certain amount of money. They post this, so if you want to go see one of your favorite hedge fund managers, maybe like a Ray Dalio, you can see Bridgewater on here, and that is through sec.gov, or even if you put in just 13F filings and then go search from there. I'm a little bit further deeper in, but this just gives you an example of the dry data that comes out of the SEC filing here. But what I've done is I've taken this into an Excel document and really harnessed in on the names that are relatively new or playing to the theory. And that theory right now is basically the fact that I think Michael Burry is positioned his portfolio for massive massive inflation, and we'll talk a little bit now about where I'm seeing that. And we can start with what I mentioned before in the bonds and the finance side. So first things first is ticker TMV. This is a triple bear leverage, meaning that when bond yields go higher, bonds go down. So what this fund is doing is it's tracking the bond price. So with inflation, Michael Burry thinks that the yields are going to go higher, and then from there the bonds will sell off. Well, he's leveraged this 3 times. So if we just take a look here at Yahoo Finance, we'll take a look at the direction daily 20 plus treasury bear triple leverage. I do not advertise this for anybody. I think that this is for experts only. In my personal opinion, I wouldn't touch anything like this. But we can see over the 1 year performance, this has done really well leading into Q1. We've kind of seen it flattening out, but he's definitely, played this run up. That's for sure. It looks like it started back in January, much like when we saw the inflation worries come into the market, and it looks like it shot right up. So I'm sure he's done pretty well from 60 all the way out to 83. We don't know if he still holds it today, but my assumption would be that he does hold it. So that gives you an indication of the first play. We also see that he's got a couple other bond plays in the mix. So we have the iShares 20-year treasury bond. This is a short. These are shorts as well. And basically, so he has a put option on this, on the iShares 20-year treasury bond. And if we take a look at what TLT looks like, TLT here over the past year has been going down ever since beginning of January. We've definitely seen it come down. So again, Michael Burry has puts on this, so he wants the bond price, this ETF, to go down. So he's definitely been winning there, and we've kind of seen that through the fund performance. If we go back to the Excel sheet here, we have the next one, which is the ultra short. So again, same bond product, expecting that bond yields will go higher, bond prices coming down. He owns actual shares, but he also has call options as well, and that ticker is TBT. These all trade on the US stock exchange as well. We also have another Ultra Pro short. So we can basically add these all up, and this is about $241 million, expecting that the bond yields will go higher, bond prices going down. That's incredible when you think about that's what his portfolio was valued at Q4 of 2020. So absolutely incredible there. Going back to one of my videos I've done before, profiting from inflation, consumer staples is one sector to look at, because you would expect that consumer staples would be able to pass on the inflation cost to the end consumer. We can see here with Kraft Heinz, he's increased his position all the way to, he's increased it by 99%. So you have over $46 million in call options. We don't really know what the strike price is when it comes to these 13F filings, nor do we know the expiry date. But we can note here that that is a massive amount of call options that are played in there. We also have the energy sector, which we touched on when we were looking at the sector performance. He has reduced one position in ticker symbol D now, but still this is current exposure, $7 million. And we also have massive gains or additions to the portfolio in Suncoke, Precision Drilling, Occidental, Helmrich, and Payne. My apologies if I've mispronounced any of those. We can see the Occidental may be a direct play on oil, but there's also, drilling, exploration. And where energy is super important is it moves into the commodity side, which we talked about in inflation. Commodities, are definitely one sector that you want to be in when there is inflation concerns, and we can see Michael Burry is making these steps. The next one that you want to be in is physical assets or real estate. And we can see he has reduced his position. We still saw from the previous performance chart that it did make up 15% of his portfolio. So it is still massively there, trimmed, yes, but still a massive portion. We also see 3 transportation stocks that move into this. Now, a little bit about these transportation stocks is some of them are tankers, and tankers traditionally move around commodities. So we talked about before in an older video about how shipping costs have increased 4x in the past 13 to 15 months. So these prices are steadily going higher. You have problems like the Suez Canal crisis that is still causing effects in the market. You have, a mass amount of demand because the whole world's coming online at the same time. And then you have commodity prices going higher. So not only is Michael Burry moving in on transportation here with the higher shipping costs, he's also moving in on the higher commodity costs. So this is a super smart play in my opinion. I think he's definitely done the right thing. So realistically, if we add it all up, it's about a $345 million bet that he has. The inflation is definitely on his way. I mean, forget the Tesla news. Let's put that aside. I think if this play works off, it could definitely work miracles for him. I know he was kicked off Twitter, and I know a lot of people like to kind of live on his word because he was able to predict that housing market crash. But if we break it down and we read between the lines in this 13F filing, we could definitely say that inflation is here. It's not transitory. It is definitely a huge part of what we should be considering, although sometimes not bad. If hyperinflation does occur, we could have some problems with fiat currency. But let me know what you think. Do you agree with Michael Burry? Do you see inflation in the market already, or is it coming? Let me know down below. I hope you enjoyed the video. If you're still here, don't forget, give me a like and consider hitting that subscribe button. Hope you all have a great week in the markets. Happy trading.